The only thing more expensive than investing is not investing, but losing money while doing it is self-sabotage. So this evening we are going to look at 7 easy tricks that savvy investors use to stop losing money and instead to make money. Now, I had a thought experiment. I'm like, if Socrates were teaching this and teaching the wisdom of personal finance where you stop losing money, what would he say? How would he look at it? Because wisdom from the ages is still wisdom today. And you are going to see why it is important to study history and to study how successful investors have done it over the years. Because you don't want to keep losing money. You don't want to keep losing money investing in the stock market or in crypto or in Forex or real estate. You don't want to continue to lose money. Now, you will lose money, but it shouldn't be something that happens all the time. You will lose money because many investments carry risks. And in the course of learning to invest, you are going to lose money. But when you become a habitual money loser, every strategy you try in the stock market burns your fingers and you lose money, then you need to apply these 7 tricks that I'm going to share with you. So if Socrates were teaching this, his most well-known quote is that the unexamined life is not worth living. So if Socrates were teaching personal finance, he would say something like, the unexamined portfolio is not worth holding. Please type it in the comment section. That should be an aha for somebody. The unexamined portfolio is not worth holding. I meet so many people who tell me, oh, I invested in such and such a company in the stock market. I invested 25 years ago and I don't know what happened to it. I just left it. I don't even know. So there are many people like that. Oh, I invested $1 million 20 years ago in such and such a company. They folded and I've lost the money. And so how can you invest? How can you build a portfolio and you don't monitor it and you don't see what is going on? So some people invested in companies that were long dead, but they were not minding it. So Socrates will say that the unexamined portfolio is not worth holding. So most people lose money not because the market is against them. They lose money because they keep making the same avoidable mistakes. That's why you continue to lose money. So many times, like I tell my mentees in the Financial Fitness Challenge, the money is not in the market. The money is in the mind. And so it's really important understanding what you're doing and also managing and mastering your emotions, because those are very, very key to profitable investing. And it really works because many of you who took the recommendations I gave you a couple of weeks ago, you are making millions. How many of you listening took the recommendations? Penny stock. I talked about Kutix. I think I'll find the video and put it under here. I talked about Kutix. Since that time, Kutix has almost done 40-something%. So if you invested 10 million just last month, that 10 million in Kutix is 14 million today. It's not even up to 3 weeks. Yeah, so if you took advantage, the same thing, I told you about a couple of penny stocks. The same thing is happening with Tips. Tips was there. The same thing is happening with UPDC. People are almost doubling their money from those recommendations. Because now you are making money there because I took into consideration in my analysis these 7 tricks that I'm about to share with you. So now, the trick number 1 is the inversion mindset. Please type it in the comment section. The inversion mindset. And that inversion mindset is to think backwards. And I'm going to show you how it is so powerful in making your investment decisions, and not just investment decisions, even your business decisions. In fact, not just your business decisions, even your life decisions. This inversion mindset, the inversion thinking, is going to change somebody's life today. I tell you, it's really, really, really powerful, as you can see. So, Warren Buffett, he had a partner, very, very famous in the investment world, Charlie Munger, at the time. So, Charlie Munger said something. There's a little book Charlie Munger wrote. I forget the title, but when I remember, I'll put it in the comment section, or somebody can actually come back tomorrow and remind me, and I'll find that book. Fantastic little book filled with so much wisdom. Because why I encourage you to become an investor is not for the money. I am telling you, investors are among the wisest human beings who ever lived. Because investing will cook you. Investing will cook you. It will cook your emotions. It will cook your sense of greed. It will cook your fears. Investing will mold your character. Investing will toughen your mind. I've put $100,000 somewhere into so-called hedge funds as I was living here, and lost it. It knocked me out for years. Knocked the family out for 7 or 8 years. I couldn't recover because that was all the family savings, $100,000. Then, and then I put it in the Nospetco, and then another scheme they called Wealth Zone. Some people don't survive. Some people can't survive losing that amount of money. Because somebody has reached out to me who wanted to unalive himself because he was owing. And I asked him how much he was owing. This guy told me 500,000 naira. I'm telling you, if you're an investor, nothing will make you afraid, because there's nothing you haven't seen. I've lost everything. I've lost everything in my life, investing. And then there have been times like today, I had to rebalance my portfolio because it's a portfolio. There's a particular stock I have held for years. Eventually, it will do well, but I'm seeing bigger opportunities. If you're listening to me today, tomorrow, just like I recommended last month, if you have some money to invest tomorrow, put it in Presco. Put it in that stock, not later than tomorrow, because they are closing their qualification date for their massive dividends is ending next tomorrow, and it's a very, very solid stock to hold for life. I've been accumulating. Now, investing makes you wise, and somebody can type that in the comment section. Investing makes you wise. I'm telling you. And if you're not wise with money, you can't be wise with anything else. Money is powerful. If you're not wise with money, you won't be wise in anything else. You won't be wise in relationship. You won't be wise in your career. I'm talking about wisdom, not just being smart. So Charlie Munger said, we're talking about the first trick, which is the inversion mindset. So Charlie Munger said, tell me where I'll die, so I'll never go there. That's a powerful quote. Tell me where I'll die, so I'll never go there. So smart investors do not just ask, how can I make money? Smart investors also ask, how could I lose money? Which is the problem with the get rich quick, too good to be true schemes that pop up once in a while, especially in Nigeria, in the Philippines, I guess in India, especially Philippines, Nigeria. So you have all kinds of schemes, get rich quick schemes. Today it's one real estate miracle project or something. Next is Cybex, something about trading, Forex. The next day is all kinds of things. But if you use the inversion mindset, you won't fall to it. You won't fall to losing money. You won't lose money. So the smart investor asks, how can I make money? But they don't stop there. They also ask, how could I lose money here in this thing? So list those risks first, how you could lose money. Then build your strategy around avoiding those risks. If somebody comes to you and tells you, oh, come and invest in this, come and invest in this, and then the person tells you, there's no risk at all, run for your life. Somebody tells you, come and invest, come and invest. Oh, if you put in 100,000 every week, we're going to give you 500,000. And then you ask the person, what are the risks? The person says, no risk at all. Just bring your money and all that. Run. RUN for your life. Because every investment carries risk. So list all those risks and then build your strategy around it. So the action step for you for this trick number 1 to stop losing money is, before your next investment, write down 3 ways it could go wrong. That is how you use inversion thinking. Write down 3 ways that this particular investment could go wrong. Now, if you can't mitigate those 3 things that you put there, please just walk away. No matter how juicy the offer is, no matter how juicy it is. I've walked away from investments, sometimes which turned out to be profitable, but I had my peace. Okay, so that is trick number 1. Trick number 2 is what we call the barbell strategy. Play both extremes. Play both extremes. So Nasim Taleb, I will put references to some books you can read and educate yourself a lot more about these ideas in the description section of this session. So Nasim Talib, another genius that I follow, I listen to, he said, balance ultra safe assets like index funds, maybe bonds, balance them with a small percentage in high upside with calculated risks. Okay, so that's like the strategy that I am using in my crypto trading right now. I'm being mentored. I paid someone to mentor me, and the guy is doing a great job. And I'm using this strategy. There are some very, very volatile, high upside cryptos that can do 1,000%, but can also wipe you out. But then there are also stable coins that I am buying, including Bitcoin itself, that's stable, that does it. So you balance both extremes. That's why it's called the barbell strategy. All right. So most people lose money by staying in the mushy middle. They just pick mediocre stocks that don't really have any real edge. Someone was telling me, she bought a stock like 3 years. For 3 years now, that thing has been there. At that time, she bought it because it was cheap. And the stock price is almost basically around the same thing for 3 years. Meanwhile, there are other stocks that have returned 300, 400, 500% since she bought that one. So that's how people lose money. So allocate 80% to stable investments. I have given you, for those of you in the financial fitness mentorship group, my mentorship group, I've given you stock recommendations. I've given you penny stock recommendations, but please don't stop at penny stocks. Please buy some dividend aristocrats, or blue chips as they are called, or premium. Buy those. The prices might be high. Like if you're buying Seplat today, Seplat should be in the high 5,000s. Airtel is 2,000 something. Of course, Presco is about 1,275. A couple of high. The stock prices are high at the time, but they stabilize your portfolio. Because the amazing thing about penny stocks is that penny stocks can literally make you rich overnight, just like what is happening with Kutix now. So when I recommended to Kutix, it was 2 naira 40 kobo, and some people bought at 2 naira 40 kobo. Today, people couldn't even find to buy, and they were bidding 43 naira 96 kobo. By tomorrow, it's going to be 44 naira something. So at this rate, within a week, it's going to double. So if you put in 10 million naira last week, it's getting to 20 million in no time. That's what penny stocks can do. But they can also hurt. So the Barbell Strategy says, don't just stay in the middle. Don't stay in the high volatile extreme, or just stay with the very, very safe, ultra safe assets. Because if you do that, you're going to lose money. Okay, so I hope somebody has captured trick number 2. Trick number 3 is the Mr. Market rule. Exploit the mood swings. Many times the stock market is just a game of moods, a game of emotions. And many people do not invest based on sound fundamentals. They just invest with the moods. So Ben Graham, who was called Mr. Market, used to offer prices daily. And when everyone was buying, when he's euphoric, that's everyone is buying, sell. So sometimes you go contrary to the market. When he's panicked and the headlines scream doom, that's actually for the time for you to buy. So most people lose money by doing the opposite. Something like that happened recently. So the central bank came up with this policy. I think they call it obligator. Forgive me, I don't remember that terminology, but basically what it was, it stipulated that banks that still had obligations, maybe to foreign institutions that they borrowed money from, that they should no longer pay dividends, and they should not pay bonuses to the directors until obligor. Thank you very much, Augustine. Forbearance, exactly, Stephen. Thank you very much. So, and several banks were affected. And then what happened? People started panicking, and they sold. I remember Zenith Bank particularly. My brother came, Zenith Bank is affected. All these banks, they are affected about this thing and all that. Should I sell? Should I sell? I said, sell, that we, the wise ones, will buy. And people were just selling, panicking and selling. And it came all the way from 51 naira to as low as 43, I believe, to as low as 43 naira. And guess what? When we, the wise people, saw what was happening, we jumped in, because that was an opportunity. And Zenith Bank, within a couple of trading days, went all the way from that 43 naira that people offloaded their golden asset just because of headlines. And today, you can't get Zenith Bank. Within 1 week, the thing went from 43 to 57. Do you know how much money that is? For something within 1 week to go, like if you have money to invest and maybe you even decide to trade. I don't trade. I hold, for a long time. You could have made so much money, because 43 naira to 57. What's that? That's 14 naira. So can you imagine if you were dealing with like 1 million shares within 1 week? That is 14 million in profit. So that is trick number 3. Trade the moods when everybody is panicking, and you discover that the fundamentals of the company are good. Buy. That is they exploit the mood swings. Trick number 4 is a silent tax killer. This particular one is the reason I don't encourage people to use apps like Bamboo to trade Nigerian stocks, because you're going to be taxed twice. You're going to pay commission twice. And Socrates would say, beware the hidden wolves. So a 2% fee, did you know that a 2% fee over 30 years can steal 40% of your wealth? But because you're just paying 0.4%, 2%, 3% here, 0.5% here. It looks tiny and small. But over a period of 20, 30 years, it could steal up to 40% of your wealth. And there's even inflation, which makes it worse. So most safe, in quote, investors lose money slowly by ignoring that. So audit your fees. Many times, and I'm guilty of that, the stockbroker sends us contract note for the purchases that we made in the day. Many times we don't sit down to actually look at those fees, but they do matter a lot. Okay, trick number 5, I'll call that the anti-news habit. Anti-news. People are losing millions and losing their fortunes every day listening to headlines. So, and those headlines are big distractions. So that's why CNBC and all those people, and I know, because I don't watch those things, I know CNN and all those people, they have their business segments. But today, the amazing thing is that there are tools within reach. There are tools that you have that can actually allow you to do your incredible research. And not only that, AI is also helping a lot in stock research. So I don't need CNBC. I don't need anybody, just telling me, oh, okay, the war, Iran, something, oil and all that. I can do it real time because the tools exist to be able to do that. So the CNBCs of this world are not, they won't make you rich. They won't make you rich. In fact, there was a time, many years ago, I was always glued on CNBC. Then I go to the newspapers and then look at the capital market reports, and those things are okay. But they never made me rich. They never stopped me from losing money. I lost money. So, but they are designed to keep you watching. And most investors lose money by over trading on headlines. They just hit headlines in the morning news. The stock market news or the something economy. They just hear that news and rush to the market, make panic decisions, and lose money. So I would recommend unfollow financial media. I don't even listen to them. Now that I'm thinking about it, it's crazy. I don't follow financial media. Check your portfolios quarterly, not every day, so that you don't have high blood pressure, and write down your thesis. Only change it if the fundamentals change. If the fundamentals in that company change, if the fundamentals in the economy that affect the fundamentals of that, change, then you can change your portfolio. Okay, trick number 6, I call that the dumb money mirror. The dumb money mirror. Spot your biases. Socrates again will say, man, know thyself. Are you buying because of FOMO? That is a sure recipe to lose money. And then are you selling because of panic? That is a sure recipe that you're losing money. So the dumb money cycle is buying high and selling low. Buying high because of greed. Oh, it's going up. Whoa, it's going up. It will continue to go up. It's 200. By tomorrow, it's going to be 200. You buy. And then something happens, maybe some headline and all that. And then you panic and sell. You bought 200, you panic, and then you sell it 95. Stop losing money. Stop losing money. Savvy investors invert this. Remember that first trick. Before you buy anything, always ask yourself, not just how can I make money in this, but how could I lose money here? And plan your strategy around that. That's the first trick. So next time you feel urgency to act, pause and ask yourself, am I being rational or emotional? Wait 24 hours. And I did it today. Because you see, I was recommending Presco. I just recommended Presco a few moments ago. I took a while to look at that Presco before making the decision. I loaded up today. I'm also going to load it up tomorrow, because I asked myself, am I being rational or being emotional? And I found I wasn't being emotional. And then incidentally, there was so many people wanting to take profit. So there was, like, at some point, like 85% offer and 15 or 10% bid. And it stayed literally like that throughout the market. If you traded today, you will understand what I'm talking about. So, spot your biases. And then finally, trick number 7. This one is mind blowing. It's mind blowing, and I think I saved it for the last for a purpose. So, trick number 7 is what I would call the compound ignorance fix. The compound ignorance. Just the way that money compounds is the same way that ignorance compounds. The ignorance that many of us had about the financial markets in the first half of our lives, the ignorance we had about real estate, the ignorance we had about the financial markets, the ignorance that we had about stock market has been compounding. And today you are in your 40s, you're in your 50s, or even in your 60s, and you're overwhelmed. You don't even know where to start. That is a symptom of compounded ignorance. So most people lose money because they stop learning. Anytime you stop learning, you start losing money. Anytime you stop learning, you start losing money. I just signed up for a class with a guy for $2,000. I just signed up for a class to learn a particular skill. There's a lot I could do with the $2,000, but that's been my life. And people who know me know I'm never without a mentor. I'm never without a coach. And I've been coached by some of the world's best. And it shows. It was very helpful. I've been coached by Billy Janie's marketing. For some of you who know him, I've been coached by Dean Jackson, who was called the marketing Buddha. He was the guy that, first of all, discovered the squeeze page concept in the internet. In those days when internet is starting, I've been coached. I paid, also paid my ticket, traveled to Florida to spend 2 days with Dean Jackson. So once you are not learning, and if you're not learning daily, you're losing money already. Because losing money and ignorance are what Nigerians call 5 and 6, meaning they go together. If you are not learning, you are not part of sessions like this. Okay, can you imagine what you've learned? And if you're sincere and you've learned something, just type in the comments, just being here today, the past 30 minutes, you've learned something. You can feel the joy of knowledge. You can feel hope. You can feel some positivity. You can feel some insight welling up from inside you. And as you were listening to me, some of you already have been getting ideas for your next money move. If it has happened to you, just say true. Just type true in the comment section. That's the power of learning. Listening to podcasts about personal finance, watching YouTube videos. In the past 2 weeks, I've watched tens of hours on crypto. So if you're losing money, if you're the kind of person losing money, I can almost guarantee that you don't learn, that you're not a committed learner. And then learning is so sweet to the heart and so important to the mind. And another reason why learning is important is because the money is not in the market. The money is in the mind. The money is not in the market. Because if it's in the market, listen, the Forex market every day, some of you who trade Forex, you can also correct me, but the Forex market every day is like $7 trillion, $5 to $7 trillion exchange hands. and institutions around the world every single day. So the money is there. Then the stock market around the world trade trillions of dollars every single day. So if you check like the Nigerian Stock Exchange, you'll be amazed how much was traded today. Hundreds of billions. But why is it that none of that it's in your wallet? Why is it that none of that is in your bank account? It's because you don't know. That's why I say that the money is not in the market. It appears it is there, but it's actually here, because this is what is limiting you from accessing the money there. What do you do about this? You learn. Okay, so the best investors study. They study history, they study psychology, and they study failures more than tips. Most of this is you're seeing here is history, psychology. There's one interesting one here. If you could buy that, so if you could buy this, there's one interesting one here. It's called A Short History of Chinese Philosophy. Many times money is not in the money books. It's not in the finance books. So most times, yeah, I do have finance books here. I do have some really cool finance books. Like this is a really very good one, Technical Analysis of the Financial Markets. Fantastic book, by John Murphy. So I do read the finance books, but many times my money is not in the financial books. The money I make is in history, it's in psychology, it's in philosophy, because psychology helps me to communicate. It helps me to communicate better, helps me to market better, helps me to write better copies. So learn. The best investors in the world learn. I forget how many pages that Warren Buffett says that he reads every single day. So I would suggest that two recommendations I will give you in the immediate is The Intelligent Investor and also Psychology of Money. Powerful books. In fact, read The Psychology of Money. They're very, very powerful books. So, ladies and gentlemen, the market doesn't care about your hopes. Many of us have hope, and many of us have dreams. The market doesn't care about your hopes. It doesn't care about your dreams. The market rewards discipline. And if only our people can get this, then you will stop pursuing all these get-rich-quick programs all over the place, get-rich-quick schemes. And then our youth, then you stop pursuing fast money. You stop pursuing fast money. Some of you saw the viral video of a young man who went into a bank and climbed the roof, waited for all the bank workers to go so that he could go hack the bank. And then if he has succeeded, he will come out the next day and then be riding very expensive cars and, carrying the ladies, and everybody would be hailing him, billionaire. But they got him. And then he's probably going to spend the next 20 years in jail trying to hack the bank system. That's not how you make money, young people. That is too fast. The market doesn't care, about your hopes. It rewards discipline. So master these 7 tricks, and you won't just stop losing money. You will start building real wealth, which is really what the Financial Fitness Challenge, my mentorship group, is. It's not a get-rich-quick thing. So it's not that you just get into the Financial Fitness Challenge there, and then, you step into a you become rich overnight. Even though that has happened, because with just a few recommendations, people are already making tens of millions. People in the group are already making tens of millions. And then they're all sending me private messages thanking me. But it's not a get-rich thing. So in the Financial Fitness Challenge, which is designed mostly for people in the second half of their lives, Because the reason that many of us in our late 30s, 40s, 50s, 60s, the reason we struggle with money, I have been screaming this, I have been personally screaming this every single day, is that, because that was my experience, is that we don't have systems. We don't have systems for making money. You know, these go to school, get a degree, get into the labor market, find a job, work until you retire. That thing is broken. It's broken so many, and many of you know, the 9 to 5 is choking lots of people. But it doesn't have to be that way. And many of us are carrying that 9 to 5 mentality into our 40s and 50s and 60s, and you are still struggling. Now you're 54, you're 48, you're still struggling. You're working 3 jobs, and you still don't have financial peace. You're still struggling, even with 3 jobs, to pay your bills. Doesn't that tell you something? And then because you do not have a system. So in the financial fitness challenge, I guide you to, number 1, to start looking at money differently. Because when you change the way you look at a thing, that thing you look at changes. And many of us are not having very good experience with money because of the way we look at money. Because of the way we look at money. And many people in the financial fitness challenge have clearly said that they now look at money differently. One lady said that she used to be a spender. She used to buy things. She used to buy handbags, shoes, all kinds of things. You know, she bought and bought and bought. But she said that since she attended the financial fitness challenge, that she's seen money differently. She's now buying assets instead of buying shoes. So these are the things you learn: mindset changes, building your own wealth system where you can make money, manage it, and multiply that with patience so that you can retire in abundance. Because most of us, retirement is staring us in the face, and people are afraid because they can't retire. And you still have to be working in your 60s into your 70s. That's terrible. So if that is you, and you want to end that stress and find financial peace and do things differently from the way you've done it since 40 years ago, send a WhatsApp message. It's also in the description. Just say, send me early bird payment. It's just the price of a lunch, because I made it very, very accessible so that anybody from any part of the world could be part of it. Send it to the WhatsApp number in the description. I'll also give it to you. It's +234 8088 000 111. We are currently recruiting for the current cohort. So send the message right now. Take advantage of the early bird, and then you will join us. Okay. So what are your aha moments? Type in the comment section. What were your key takeaways today? What changed your mindset today? What are you going to? So let me take a couple of them and then a couple of comments before we draw the curtain tonight. Best Grade said, good evening, sir. Thank you so very much for your teachings. How can one without a portfolio buy the Presco stock tomorrow? I'm not sure what you mean. You don't have a portfolio? Do you mean you don't have a stockbroker? Clarify what you mean by not having a portfolio, because you can buy. All you need is to fund your investment account with your stockbroker and then buy from the comfort of your home. You don't need to call anybody. And if you don't know how this works, please go to my video, to my playlist. There's a playlist on my channel. Just look at the playlist. You see one on stock market investing. Spend time there tonight. All these questions you're asking, including how to buy shares, you can get it. if you have all the requirements, if you don't have a stockbroking account, if you have all the requirements, your means of ID, you have your BVN, you have a bank account, you can get started, and you can still buy next tomorrow because they are closing on the 4th of July. Patricia says, does Afro Investor 2.0 charge commission twice? I don't use Afro Investor, so I do not know. But it looks to me like Afro Investor is connected to a licensed stockbroker in Nigeria, just like City Trader is the app or the interface that Atlas Portfolio uses. So if it is owned by a stockbroker, a licensed stockbroker, they wouldn't be charging commission twice. Yeah, Marshall says that his aha moment is that the money is not in the market, but in the mind. Absolutely, that's what you have to learn. JF says, instead of using bamboo to trade, what will you recommend that is better? Trade with a licensed stockbroker. But if you are non-Nigerian and you're finding it difficult to open an account, you can use bamboo if it's available in your place. Okay, I've been trying to fund my wallet, Amwa says, but can't load it because I'm in Ghana. I'm using AfriInvest. Okay, I don't use AfriInvest, so I'm not sure how you can do that, but you can actually reach out to their customer service. Many of them have customer service. Samuel says, does ARM, does ARM charge commission twice? I don't use ARM, but I don't think so because ARM is Nigerian and they are licensed. All right, ladies and gentlemen, this is where we're going to say good night. It's always a pleasure doing this with you. And if you have enjoyed this, please share it. And then if you haven't, all this while we've been talking, please, if you haven't liked it, loved this, and you've gotten value, it doesn't cost you anything, like it. And if you haven't subscribed to this channel all along, maybe you forgot, maybe it's a mistake, maybe I didn't just remind you to do that, go ahead. But more importantly, please share this so that our people can learn and be free. And so that all those people who depend on you, who ask you for money, all those people are creating the black tax problem for you. If they start making their own money, you'll be free. And the reason I've gone ahead to do this is what I normally would charge people for one-on-one. But the reason I've been doing this is because so many people are asking me for money. And there's no way, because I'm not the shepherd. Said the Lord is your shepherd. I'm not everybody's shepherd. It's just impossible for me to meet all the financial requests that are thrown at me. So I decided, okay, why don't you just make this information available free of charge for people, like I'm doing, and then you're getting enlightened. So please share it right now after this, and then subscribe. Also hit the notification bell so that whenever I'm live, you will be able to get the message. But whatever happens, ladies and gentlemen, keep showing up. Things are not always as bad as they seem. And you never know what's coming your way next. I'll see you same time tomorrow. God bless you. Good night.